What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Back for another quick update on ChargePoint. The stock popped post earnings, climbing as high as $1.49 before coming back down and closing the week at $1.31 for a weekly gain of 7.38%. Was the earning news really that good? That will be the focus of today's video. And so I'll give you the cliff notes from the earning call, then we'll take a look at the analyst ratings, some changes here, and I'll close with what I'm personally doing as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I will be sharing. Drop the video a like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. There are a few key takeaways from the call to cover. One of the main concerns with ChargePoint was how the incoming administration policies would impact the ChargePoint core business. If you have not been following us closely, it's basically all focused around the $7,500 EV tax credit going away potentially, and as a result, slowing down EV sales. If that happens, then the concern is that ChargePoint pool of potential customers would stagnate at best or shrink at worst. And with that in mind, the ChargePoint leadership team quickly put those concerns to rest by reiterating that they expect to achieve profitability sometime next year, and they have to date not seen any changes in their order book or customer interest. Additionally, and this is probably the biggest point in favor of ChargePoint, it's the fact that they beat revenue expectations. They were projected to report a loss of $33.3 million from sales of $90 million. Instead, they reported a loss of $28.6 million from sales of $100 million. The point here is that the Q3 guidance for sales was $90 million, and they beat that by $10 million over with a reported $100 million in revenue. It's also worth noting that the forward guidance for Q4 came in pretty much right at the target that analysts were expecting and hoping for. The target number is $102 million, and ChargePoint gave a forward guidance of $95 to $105 million, and that is good. The last piece of commentary around these results worth highlighting is the story around gross margin and operating expense. ChargePoint had previously committed to getting operating expenses under control and gradually reducing them. Looking at the graph here, you can see that they indeed sustained a downward trend. Now, to be fair, some of this was achieved by reducing their workforce. It's not always the most ideal way to go about doing this, but it is the quickest lever to pull to get operating expenses under control. The bottom line here is simply this, and it is that the results were better than expected, and the forward guidance, and that's key here, has investors and analysts alike cautiously optimistic, hence the pop in the stock price. But I do have to say, and we have to keep this balanced, that those reported earning results were not enough to sway any of the analysts covering the stock to change whatever ratings they currently have. As an example, Colin Rush from Oppenheimer, in his note to investors, called these results solid progress, but maintained his whole rating and refrained from giving any price targets on a go-forward basis. And so that's important to be aware of. Overall, the consensus rating remains a hold, but the recommendation is now made up of 9 ratings instead of 12. And again, that's because some analysts simply did not reissue new ratings or price targets. The breakdown is as follows. We have 2 buy ratings versus 4 before. We have 6 hold ratings versus 9 prior, and down to 1 sell rating versus 2 prior. The high end of the price target range decreased further from $4 to now $3 even. The low end is unchanged at $1.20, and the average consensus price target decreased from $2.31 to now $2.12. That still represents a gain of 61.83%, right? So again, there's still things here to be excited about. And so it's probably no surprise that my take from last week is no different than this week. As I've said before, investing in ChargePoint requires having a longer time horizon. Accumulating is the only path forward as far as I'm concerned. And to be clear, I'm talking strictly for me, okay? You're gonna do what you're gonna do. And so the stock price may be challenged now, but once it starts looking that we are getting closer to profitability, I fully expect that the price action climbs quickly. The beauty of being this low is that achieving a double or triple return on investment can happen fairly quickly, right? We're talking $1 all the way to $3. That doesn't take much. And so for now, I will keep accumulating. But on that note, that is it for me today. If you found value in my content and feel so inclined, use the thanks button at the bottom of the screen. Remember to click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on X for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.